This here, and I'll get in 5 minutes, if I may. We got a lot of members who want to be heard, so it's limited time. I said to my comment.
I thank the distinguished
Senator
chairman.
from Rhode Island is recognized.
And I do wish to comment today on the nomination of Bernanke for a second term at his critical post on the Federal Reserve. As our nation continues to recover from the worst financial crisis since Black Tuesday of 1929 and the deepest recession since the Great Depression, the chairmanship of the Federal Reserve is one of the most important positions in the federal government. Earlier this month, Goldman Sachs, the Wall Street behemoth, announced a bonus pool of $16.2 billion. JP Morgan recently handed out a $9.3 billion set of bonus payments, and the Wall Street Journal reports that Bank of America is expected to match the bonus level that it paid in 2007, prior to the collapse of the financial bubble and the taxpayer bailout. Mr. President, these bonuses make it clear that Wall Street has recovered from the economic downturn. A recover further indicated by the TED spread, which fell today to 0.17, again signaling recovery for the banking system. In contrast to the restored prosperity being enjoyed on Wall Street, Americans on Main Street still struggle through the aftermath of the Bush recession. Unemployment nationwide hovers around 10%. In especially distressed areas like my state of Rhode Island, the employment situation is even worse. Rhode Island's official unemployment rate was 12.9% last month, and the proportion of Rhode Islanders who are underemployed, working part-time, or at jobs below their skill level is considerably worse than that. Families in my state and across the nation are struggling to pay for groceries and to stave off foreclosure. The economic distress is so widespread in places like Rhode Island that hardly anyone remains untouched, directly or indirectly. It's heartbreaking to drive around parts of Providence where nearly every house on the block is boarded up, where families have been evicted from their homes, and the neighborhood is now in physical decay. The explosion of the housing bubble left wreckage across this nation, which will take years, perhaps even decades, to clean up. Mr. President, Ben Bernanke bears considerable responsibility for the lax regulation that brought about the housing bubble, and there's no mea culpa he can profess that will erase that fact from history. To make matters worse, a quick review of his public statements in the months leading up to this crisis demonstrates a troubling pattern of false confidence. On February 27, 2008, just months before the start of our Great Recession, Chairman Bernanke said this: "The non-financial business sector remains in good financial condition with strong profits, liquid balance sheets, and corporate leverage near historic lows. By 2010, our most recent projections show output growth picking up to rates close to or a little above its longer-term trend, and the unemployment rate edging lower." Well, here we stand in 2010, and it could not be more clear that Mr. Bernanke was far wrong. Regarding the housing crisis, Chairman Bernanke said on May 17, 2007, "We do not expect significant spillovers from the subprime market to the rest of the economy or to the financial system." Again, he could not have been more wrong. Regarding the strength of our financial sector, Chairman Bernanke said on February 28, 2008, "Among the largest banks, the capital ratios remain good, and I don't expect any serious problems." We need a Fed chairman with the foresight to anticipate problems and to take action before they occur. Chairman Bernanke has clearly not demonstrated this capability. As the President of the United States noted in his State of the Union address last night, the bank bailout was about as popular as a root canal. Well, it appears that Chairman Bernanke will be reconfirmed, but I want to express with my vote that the leaders of President Obama's economic team must pivot from the necessary rescue of our major financial institutions to equally, if not more necessary, help to America's families. In prioritizing the recovery of Wall Street, leaders at the Fed and the Treasury, I believe, made significant errors in several key areas, failing to establish a due process mechanism to legally make adjustments to Wall Street pay, bonuses, and counterparty liabilities, so they all had to be paid 100 cents on the dollar. Hoarding the TARP reserve for banks long after banks were secure, when families were desperate for help. But no, they clung to that reserve just in case the banks needed it, never mind the present need of American families. Third, allowing the banks to prevent families in this chamber fighting against it access to bankruptcy courts to readjust their home mortgage debts, the way any other debtor can do for any debt, including the big banks themselves. Giving banks and investment banks unlimited access to 0% loans at the Fed window to use for arbitrage, while profitable small businesses are desperate for credit to use for jobs. Other nations, the UK and France, have announced special taxes on banker bonuses to help pay for bailouts. Not here. If you're a scorekeeper of our recovery, it looks like it can be summarized in the two-word phrase, bank wins. That is not a balanced score. So I'll conclude by saying that whoever leads the Fed for the next 4 years, I urge that we start prioritizing help for the middle class. The Fed has enormous powers that could be used to help people. It can regulate credit card rates. It can force big banks to reduce principal on underwater mortgages. It can provide credit to small businesses. If our nation's central bank is to regain the confidence of the American people, its priorities must serve the American people. I thank the chair, I thank the distinguished chairman, and I yield the floor.
Mr. President.
Yes, Senator from New Hampshire is recognized.
Thank you. I believe my time is being yielded off of Senator Shelby's time. Mr. President, I rise in support of the confirmation of Chairman Bernanke to another term as head of the Fed. There are a lot of reasons. But let's begin with the most obvious one, because I think it's also one of the most important. We were, in the fall of 2008,